What's going on, guys? Hope you're having an absolutely fantastic day. So in this video, we're going to be talking about why I sold out of Warner Brothers Discovery stock, right? So let's start off with the stock price. Ever since the spin-off, April 2022, till now, it's down 39%, right? And from the peak, it's down about 43%. So the question is, what is my cost basis and what price did I sell? My cost basis was $12.36, and I sold at a price of $15.11, we can call it, with two premiums, right? Because I sold covered calls. And for those wondering what covered calls is basically I have the shares and I sell an insurance contract that says above this price you can have my shares, right? And basically I managed to sell twice those covered calls before the shares basically got called away. I'm not going to go into detail explaining what it is. If you want to understand what it is, you can YouTube. There's a lot of videos of this, right? So actually, the covered call was going to expire worthless, and it was expiring on 6th of April, right? Which was the I think Thursday before the market closed, right? So you can see that it was going to expire worthless because anywhere here it would have expired worthless, right? But then it had this huge monster rally, which was about 5 to 6% just in a single day, right? So then the options expired slightly in the money, and basically my shares got called away, right? So I'm not too upset about that. Maybe I could have sold somewhere here, right? I was thinking to sell somewhere here because the option only had about 10 to 20% of its value left, right? But then I didn't do it, and anyways, I was okay with the shares being called out, right? But would have been nice if I could milk those options another few weeks before having to sell the shares, right? So let's get on to the reason why I sold out, right? Because some people might be saying, oh, you make 30% profit and then you're selling out, right? So they might think that's a reason, right? And truth is, when I was making losses here, right, I didn't really even think of selling out, right? I wasn't panicked or anything, right? In fact, I was buying more here, right? But I should have bought more aggressively, but then my position sizing was a bit too large here. So I didn't want to add too much, right? So I think this is an incredibly important lesson for me because position sizing is quite important, and I'm still really trying to get the nail on that, right? But you can see that my valuation, or maybe the timing is just right? That I managed to buy all these things that are basically, people can say it's falling knives, but I still managed to make money, right? So you can see with a lot of things, like nerdy stock was another one that I also sold out of because my thoughts on it has changed a little as well, right? So we can see that I was going for all these really cheap businesses, right? So a lot of things can happen to them. Everything can go wrong, and I can still make money on that, right? And I think that is one of the very important points of investing, right? You want to invest where everything goes wrong and you can still make money, right? And this is the case with Warner Brothers Discovery. This has been the case with I think Alibaba, you can call it that as well, right? So the shares going down to $58, and I still made money out of the options, right? So that is something to really think about, right? You want to invest where everything goes wrong and you can still make money. So going back to it, sorry, that was kind of a rant by me, right? But I really want to talk about this, right? Why did I sell out of Warner Brothers Discovery, right? So in my view, actually Warner Brothers Discovery has a much shallower mode than I thought, right? Because as you can see, all these streaming services, right, it's going to be very competitive, right? And I knew this when I was going into the investment, right? But then I thought that, Warner Brothers Discovery, their media collection is so good, everything is so good that maybe they can be one of the big winners in this space, right? And I still think they're going to be one of the big winners in this space, right? What I'm not so sure about is whether they are going to have the same problem as Netflix, right? Where they have to pour so much money into content that they continue to lose money even though that they are in the one of the driver's seat position, right? And I think it's ironic enough, but I got this from actually a TikTok video, right? So a clip of a TikTok video was on Instagram, right? And this guy basically said that, which I don't agree completely with his statement, right? But you can see the logic in it, right? He basically said that Netflix is finished, right? And his logic for that was, think about it this way, right? YouTube is much superior compared to all of these video sites, right? Because YouTube is a place where you create content and you post it all for free, and the other side receives it for free as well, right? While Netflix, Hulu, and all these services, you have to pay for it, right? And granted, this is more professional, but you can see how YouTube is a much better business model, right? And there are some really high quality videos on YouTube, right, comparable to this kind of quality on these streaming sites, right? So that's why after that, I really took 1-2 months, maybe even 3 months to think about all this situation, right? And I think the conclusion I came up to was the same as his, right? It's not that YouTube and it's not that Netflix and HBO Max are all finished. Stock all gonna go to zero, right? I don't think that's gonna be what's happening, right? But I can't really see these companies earning a really high rate of return for a long period of time on their invested capital, right? Because if you think about it, anytime you have a high rate of return on your capital, right, someone is just going to come in and try to make even better movies and try to steal your customers, right? So basically, it's way too competitive, and the incentive structure is quite broken, right? Because all the goodwill that you put into your company is all basically going to be burned, right? Look at Netflix. Their problem is like they put in so much money to the content, but 1-2 years later, the content is worth nothing, right? And you can say, oh, you know, you can put it in your library and then basically people can watch it next time, right? But think about it this way: if you launch a series and 10 million people watch it, right, and after that, maybe let's say 100,000 people every month watch it. So is it really comparable? So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel. And also watch till the end, right? Because obviously you don't want to miss any important information. So that's the main reason why I sold out, right? And the secondary reason is also their earnings, right? So their earnings have been very lackluster, right? And I thought David Zaslav was going to come in and basically clean house, and you know, their earnings were going to improve, right? And I gave them 2 to 3 quarters already. So to say the least, their earnings were basically too enthusiastic by management, right? Basically, management projected things that they couldn't achieve, right? Even with their massive write-downs, even with their massive layoffs and all of that, right? They still can't achieve the earnings, right? And I think given them 2-3 quarters of benefit of the doubt, plus this is the main reason, right? So don't get it twisted, right? I don't think like 2-3 quarters of earnings is really enough to justify selling out of the company, right? But this change of thoughts of the mode, right, is a big justification of why you can sell out, right? Because I suddenly realized that the mode isn't as big as I thought, right? Because you can have all these hit shows and there will be hit shows for a while, right? And yet they won't be a very sustainable source of revenue and won't be a sustainable source of return on your invested capital, right? And I think one of the things is also I have to revisit why I bought it at this kind of period, right? Because at this kind of period, all the tech names were basically getting hammered, but were still very overvalued, right? So now some of the tech names, obviously some of it has rebound, but if it went down to their lows again, right, or even 50% from their lows, right, I think a lot of the tech names would be much better valued than something like a Warner Brothers Discovery, right? So I think you know that this company was valued this way because it has very heavy debt loads, and all the AT&T shareholders were just dumping out of their shares left and right. So which led to a market distortion, which basically led us to pick up shares very cheap, right? Somewhere around here. I think it's super cheap, right? Especially when it got to $9. That was just madness, right? That was quite obvious that it was not sustainable, right? Because at that time, if you use projected free cash flow, it was trading maybe 4 times or 3 times 2025 projected free cash flow, right? Which is just not a sustainable thing, right? But that's the thing, right? That was a projected free cash flow, right? So whether they can hit those numbers after missing quarter after quarter, that is also another question, right? But basically, at this time, basically it was like low risk compared to now that a lot of the things that they say they will do have not materialized. Then I think the risk has increased, and maybe management has some issues that they thought they could fix faster, but they can't fix as fast as they thought, right? And with the upcoming recession, I think a lot of these companies are going to get cut, right? So if you have 3 streaming services, you might think, okay, which is the best one? So I don't know, HBO Max might be the best one, or you might think Netflix is the best one, or you might think Prime Video is the best one, right? I have no idea how to decipher that. I do think HBO's library is the best out of all this, right? But some people might differ from my opinion, right? So I think if you start off with 3 subscriptions in a recession, you're definitely going down to 1, right? Because you want to cut down and lean down, right? So even Jason from the This Week in Startups podcast has been talking about this a lot, right? And the co-host Molly has also been talking about, yeah, I've been doing it for myself, right? And these people are multi-millionaires, right? I'm not sure about Molly, but Jason is a multi-millionaire, right? So you think if even multi-millionaires are doing it, what are the normal households doing, right? So that will really lead to the growth slowing down. And maybe we've already seen it reflected in the numbers. That's why they have not been performing as they said they would, right? But the evidence to me now, and especially this huge overhang of like the moat issue, leads me to believe maybe this is not the investment for me, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.